Hello, good evening, ladies and gentlemen, traders and investors. This is Alex from MarketWise Asia. Thank you for watching this live stream broadcasted on both YouTube and also on Facebook as well. Today's date is 26th of May 2025. Okay, time is 10:30 p.m. We are fast approaching the end of May, heading into June already. All right, time passes very fast, half a year, okay, it's just gone by like that, okay? All right, so if you can hear me loud and clear, please say a hi to me in the comments or in the chat as well, so that I know everything is good, everything is well, okay? I think just now I have some panic attack because suddenly my laptop can't detect my usual microphone that is being held here, okay? So I need to restart my phone. Okay, hey, I think right now, the live stream platform that I'm using, StreamYard, they have this so-called the comments on stage. I can see yourself here, right? Okay, so thank you so much, whether you're on Facebook or on YouTube as well. Okay, let me take a look at the comments right now. Okay, Yok Wee, hello Monday. Okay, yep, hello Monday. Dave, Wai Lam, Meng Heng, Tessa, Deng Lim, okay. Melvin, not Guru is another person. Bernard, okay, thank you so much. All right. So, yeah, if you could, okay, just give me a share and give me a like if you're watching this on YouTube. Please subscribe to our YouTube channel as well. So that will really help me to get as many people to watch this live stream as possible if you find useful, okay? All right, so let me share my screen right now. Let me just share my screen right now. So I will just keep the comments here right on the screen now. Okay, I'm just using their beta kind of things on stage lah, the comments. All right, I think it doesn't interfere with you, right? Okay, so let me share my screen right now. Or maybe it will, but let me just share my screen and enlarge it for a while. Okay. All right, so yeah, so as usual, a disclaimer first, okay, whatever I share today, it is just for education purpose, not a recommendation to tell you what to buy or what to sell. So please do your own due diligence. And yeah, in case you don't know, today it is actually a US public holiday. All right, so it is a Memorial Day. So the US stock market, it is actually not trading tonight, but tonight, okay, the show must go on, okay. I will still continue my live stream because I think that there are still interesting things to share with you, okay, as we prepare for tomorrow's and ahead of the week, okay. All right, so just in case you don't know, you can see, all right, the things on your screen right now, top right hand corner. Today, Facebook and YouTube live stream, it is proudly sponsored by Philip Nova as well. So before I continue, okay, just want to share with you what kind of promotion they have, especially if you are new to trading and if you do not have a trading account with Philip Nova. So just give me about 5 to 10 minutes, okay, to share with you who Philip Nova is. By the way, they are so-called a MAS regulated broker, okay. So Philip Nova, all right, they are actually part of the Philip Capital Group. So you might have seen their so-called advertisement, their promotion recently on social media. They've been so-called quite aggressively, okay, on social media as well. They are part of the Philip Capital Group, established in 1983. So they used to be called Philip Futures, okay. I think this name does ring a bell, right? Philip Futures. So they have rebranded, okay, to Philip Nova because right now they offer more than just futures. They offer Forex, CFD, stocks, ETF, options, commodity, and a lot more. And they do have a lot of platform. They are a multi-asset class platform, okay. So they have Philip MT5, MetaTrader 5. So zero commission, okay, for Forex, CFD, and precious metal. They also do have the desktop app, okay, the Philip Nova 2.0. Once again, also multi-asset classes, a single ledger platform for everything, basically, okay. Stocks, ETF, futures, CFD. Okay, so for stocks, why it is commission, but if you are trading for CFD, they are zero commission. So not many CFD provider, they do provide so-called zero commission for CFD. Okay, because most of them charges around $8 USD to $10 per trade. Okay, so if you're doing a round trade, you buy sell, that is already a $20 USD commission before you can make any profits. Especially if you are having a small account, then that will really eat into your profit. Okay, and they also have a trading view integration. So if you're using trading view, you can trade directly with trading view with using a Philip Nova 2.0 account. So why do you need to trade with MT5? No, Philip Nova MT5, because as I mentioned, they are commission free. Okay, so they have a low entry barrier on index CFD as well. So you can trade as little as 0.1 lot, very small lot. Okay, so the tick value, it is just 1 cent. Okay, as I mentioned, right, they have zero commission on shares CFD. So which means that they have no minimum charges, no minimum $8, no minimum $10. Okay, so if you are just starting out trading or have very small sizes, okay, then it is ideal for you. So it is more cost efficient than brokers with fixed commission. Of course, how they make money, okay, is through the bid and ask spread. Okay, of course, it's a little bit wider, but at the end of the day, okay, it is still cheaper and more cost efficient than if you are paying a fixed so-called a commission. So as I mentioned, right, even with a slightly wider spreads, okay, the no minimum commission makes Nova a more affordable platform. And not only that, you can so-called earn swap on short position. So for those who don't know, okay, if you're trading CFD, okay, if you hold positions, typically you need to pay the financing fee, okay, so-called interest fee lah. So that's called the swap. All right. So instead of so-called paying the financing fee, if you go sell short on the so-called the market, right, okay, you get paid swap interest as well. So not many so-called provider give you that as well. So like I mentioned, tight spread, zero com on the FX, precious metal, and CFD. Okay, FX spread as low as 0.6 pips. That's referring to the Euro USD. Okay, for the gold spread as little as 20 cents. And if you are using so-called algo trading, okay, MT5 is also a very good platform. Okay, automated strategies, tech indicator, and also the custom built expert advisor EAs lah for your algo trading. So right now they have a so-called a promotion, which is a fund and trade and get $100. So this is the promotion right now. So fund and trade, okay, the promotion is between 19th of May to 30th of June. So you need to just fund Sing dollars, $1,000. Okay, you place 6 trades. There is no minimum size. So the lower size, okay, 0.1. Also, you also can do that. Okay, so you receive $100 bonus. Okay, credit into your account. You can actually head over to this link. You can scan the QR code over here, or okay, you can head over to this link over there. Open an account here. Okay, so I'll post the link in the platform in the comments over here. So you can see over there. So if you head over to this link, this is basically the account opening page. Okay, so your name, email address, password, okay, and you are good to go. Okay, and then along the application progress, right, you will hear this. How do you hear about this Philip Nova? Just select promotion campaign and select MarketWise Asia. So that let them know that you are from MarketWise Asia. So like I mentioned, execute 6 trade. Okay, all right. It is not a round trade. Just execute 6 trade. Can be just all buy 6 trade. You receive $100, or simply say 3 round trades are buy and sell. Okay, so this is the link over there. Okay, all right. Any question on this? Okay. All right, so if you have no question, can you just type OK in the comments? So before I continue, so we say, Alex, side question, do you know any platform that provide free trading view? Free trading view, I mean, what do you mean by free trading view? Trading view itself is already free, so you do not have to pay any money to use trading free. Of course, there is some limitation now, okay? Some of the prices is not live, a little bit delay, and also so-called indicators at one time. I think you can only use up to 3 indicators in your platform. Okay, and I think that there are quite a number of actually brokerages or platform. They are using TradingView as the price platform. So itself, cannot be full access lah. Nobody give you full access. So you have to use TradingView. Okay. You have to pay for the premium now. Okay, so in any case, you have to decide whether this thing is useful for you. If not useful for you, then you don't have to pay for the full access lah. Okay, all right. So only TradingView itself can have the full access lah. Okay, other platform they do not give the full access. Okay. All right, so let me go through here. Okay, so this is the MT5 in case you don't know. Oh, just now I forget to restart my computer, then I didn't show the MT5 platform. Okay, so let me just do a quick show of MT5 platform over here. Okay, so this is the basically MT5 platform. So for those who actually use MT4, it is pretty much similar lah. Okay, so they have a lot of stocks over there. So in case you want to know, okay, they have basically CFDs over here lah. So I think I use the control U is better. Yeah, so you can see over there, all right, Forex, shares, CFD, so indices, okay, from all the thing over there, okay, crypto, they also have lah, okay, all right, commodities, okay, even the cotton, orange juice, coffee, all this, they do have as well, okay, so the New York Stock Exchange stocks, basically all the big company stocks, they do have lah. So what I have here is actually the US oil, and the S&P 500. So I can't do that. Okay, so remove this. Okay, so this is S&P 500. Okay, of course, today futures, it is still moving. Okay, it is open today. That's the reason why you can see this green bar over there. So this is the MT5 platform. Okay, so let's continue over there. The economic data for this coming week over here. Okay. So let me just share the screen here. So for this week, basically not much news, fundamental data that's coming out, the new release, except on Thursday. Of course, today, Monday, it is actually Memorial Day. Okay, so US market is not trading, it's not open. So then that it is actually Singapore time, Wednesday, okay, on the 2 p.m., okay, FOMC meeting minutes over there. Okay, all right, and then the prelim, GDP, and unemployment claim over there. Okay, and then on Friday, this is the core PCE, price index, basic inflation data. Other than that, okay, pretty much quiet for the week. Okay, I think that before I forget, because I restart my comma, everything messed up with me. I think I forget to show you this. Okay, so not this coming week, it actually is tomorrow. Okay, tomorrow, okay, Adrian Reed, okay, founder of Enlightened Stock Trading, okay, is giving a webinar, exclusive webinar on the truth about breakout trading. He used to speak at our virtual summit, okay, I think about 2 years back, okay, so now he is back again, all right. He really does give very good information, okay, and also knowledge on systematic trading and also trading knowledge, etc. So this time around, he's sharing with you the truth about breakout trading, okay, where it works, why it fails, and how to profit consistently, okay. So he trades stocks, crypto, forex, and futures. So he will share with you, okay, which breakout patterns truly work, okay, why breakout performance varies across different markets, a rule-based approach to trading breakout with confidence, okay, real data, test strategies, okay, no fluff, no hype, okay. So it is actually tomorrow, 27th of May, Tuesday at 8 p.m. Singapore time, okay. It is a Zoom webinar. He is residing in Australia. So this is going to be a Zoom webinar. So you can actually register for this webinar here. I'll post the link in the comments over there. Yes, there will be recording, but only to those who are registered. Okay, so I won't send out to everybody. Okay, I won't spam to everybody. So only you are keen. Okay, then we will send the replay to you via Zoom. So you receive the replay via Zoom. So you need to register interest. Then we will send you the replay. Okay, I'll post the link over there. All right, so let me go through here once again. So as usual, okay, the social media, I won't go through this, okay. I think very fast, okay. I didn't take up too much time already. So let me just post over there. All right, so before I go into the technical aspect of the market, let me just go through once again to the macro aspect. Okay, what's happening around the world, what is happening in the stock market, okay. Last week, this week, of course, the latest news, okay. In fact, during weekend, okay, all right, it is actually this, all right. So the Trump extend, okay, the Europe tariff deadline until July. Of course, this news, okay, caused the market, the futures to actually to rally. Okay, so yeah, good news again, that kind of thing now. Okay, all right. Can't see the link on Facebook. What do you mean we can't see the link on Facebook? You mean that I didn't post the webinar, is it? Okay. Oh, you mean they can't see the link? Okay, let me try to post this link once again. Okay, I posted once again. So you see the comments. The comments should be here. Can you see the comments? Okay. All right. Anyway, if you didn't register, never mind. I think I will send out an email tomorrow also to those who haven't registered as well. Okay. So yeah. So this is the EU tariff news. So okay. Other than that, okay. I think you might have known. Okay, the rally has hit the resistance. So after a 20% rally since April 8, so can see over there the S&P 500. Okay, this is the S&P 500 futures since the bottom until now. Okay, to the top, actually it's more than 20%, a little bit higher than 20%. Okay, so from the very bottom, the low, to the high, it is actually 20% really. So not too bad. Okay. All right, so the right now there is the fresh catalyst that is coming out. Okay, I'm not sure whether you're aware of this. Okay, all right. Other than then the Moody downgrade, which I think you know already. Okay, since last week we already mentioned, and recently there is a weak 20-year Treasury auction, which means that there are not much demand. Okay, for the U.S. Treasury bonds, and then there is this House passage of the one big beautiful bill. In short, okay, they call it the OBBB. Okay, I'm not sure whether you heard of it. OBBB. Okay, one big beautiful bill. Okay, have you heard of this OBBB or not? If you haven't heard of it, okay, just type no in the comments. If you have heard of it, okay, just type yes in the comments. Okay, I'm reading through some of these news. Then I realized that one big beautiful bill. What kind of name is that? Okay, one big beautiful bill at. Only Walam say no, so the rest all yes, is it? So one big beautiful. So I'll just go through with you what is this one big beautiful bill at. Okay. All right. So once again, this is something to make you feel smarter, okay? Something that you know, okay, aware of what is happening in the market, okay? All right. So this later I'll go through. Okay, so the next step for this bill is basically the law. Okay, it's like you need to go through the parliament, then they propose this law, whether they can go through it. Okay, then the parliament, the legislative have to decide that kind of thing. Okay, so the bill now hits to the Senate. By the way, US and Singapore is a bit different. So they have different way of doing the government thing. So in a way, the Senate thing is actually like the parliament. So they need to head to the parliament. Okay, for debate and possible revision. So other than that, as I mentioned, right, okay, also have the yield and the dollar, right? So the yield, 30 years treasury yield rose above 5% because of so-called the weak demand for the treasury bonds, okay, and also the dollar weakened. So last week, what trade ideas did I mention to you? Okay, so last week I actually mentioned about the euro, USD. Sorry, pardon for my ugly handwriting. Okay, euro USD over there. Okay, euro USD, right? Okay, if the euro is going higher, then the dollar is weakened, right? So it was working out quite well, right? While I'm actually took out profits from this, okay? All right, and also the renewed concern over the deficit and debt, okay? So turning point, all right, so right now, we are at a turning point right now. So take a look at the S&P 500. This is a naked chart. So we are at a turning point. So this is at a swing high. Okay, so this is a swing high over there. So it's starting to come down, not coming down, a little bit coming down. So is it going to come down or is it going to go higher? So this is like the turning point, right? So is it a short-term pullback or the start of a broader shift that is actually going to come down? So I'm going to ask you a poll over here. Okay, at this juncture in time, okay, this is the S&P futures. Okay, right, within the next 1 to 2 weeks, okay, within the next 5 to 10 trading days, you think the market is going to go up or do you think the market is going to come down? Okay, can you just type in your comments? If you think it's up, you just type up in the comments. If you think it's going to be down, just type down in the comments. Okay. Market rumors say U.S. government treasury bonds may default. Yeah, don't need to bother about this, Jasper, okay? every time they say the same thing, they're gonna default. Hey, please, okay. I'm not saying about you, please. I'm just saying that US, okay, the US government, they can print money on demand. Okay, how can they default on that? Not enough money, just print now. Okay, they cannot default one. Okay, they won't default one. Okay, they are still the reserve currency. They can print money on demand, whereas everybody cannot, but they can. So don't need to be bothered by this thing. Okay, they won't default one. I've been hearing this since 2011. Oh, they might default. 哎呀 these are won 不要自己吓自己啦。Okay, don't need to scare yourself. No, all these are just news to hype up, to make you scared of the market. They won't. Okay, all right. So yeah, Melvin said many guru in YouTube already saying on a big crash for FIs already. I'm still waiting. I mean, eventually it will come now. Okay, like for example, like 2020, 2022, these kind of crashes lah. Okay, yeah, but you know, the number one thing we came to mind is Robert Kiyosaki lah. Don't know how many donkey years since he said that the market will crash lah. Okay, all right. Okay, so you think it's going to go up? Okay, let me see. I mean, take a look at the comments. Okay, see the comments on the screen. Right? Okay, I think a small thing on the right hand side over there. Okay, so Wailam said down, Henry said down, down, up, down, down, up, down, up, down to the moon. Okay, Vincent said to the moon, up, up, up. Okay, so it is still like more going up. Okay, instead of going down, maybe about 55 to 60% say up, right? The rest say down. So it is actually still, I would say that it is actually still 50-50 lah. Okay, MR said that. I know this answer doesn't help lah, okay? But precisely it is because this answer doesn't help, okay? Then I am also called comforted in a way, because if everybody thinks that it is going to go up, then I think that there's a very high possibility, okay, the market might go down instead, okay? And if everybody thinks that it is going to go down, then there's a possibility that the market might go up instead, because, okay, the crowd is always wrong one. So if everybody is gravitating to one side, then very likely, okay, the opposite will happen. So right now, okay, it is really, 50-50, okay? Later I will share with you my view lah, okay? All right. So the US downgrade complete, okay? So I think I mentioned last week already, Moody downgraded US debt, okay? S&P in 2011, okay? Fitch in 2023, citing persistent deficit and rising interest costs. So this has always been the case, okay? Ever since I started trading the market since 2011, so about 14 years already, okay? So once again, okay, no surprise to the market, okay? The downgrade was expected, and Moody has placed on the US negative watch since 2023, okay? And the major index provider have already adjusted bonds rating, and you can see that, okay, the market did not really react, okay, to the news, did not really react to this news, okay? Today I'll show you some chart, okay? So there isn't any forced selling, okay? All right. So while the impact is limited, okay, but in the background, okay, the US, it is still have the worsening of the physical condition, okay, all right, increased deficit further. Basically, deficit means, okay, the US is spending more money than there's getting income from all the taxes and everything, or the income that they have, okay. The US can do this simply because of one thing, okay, because they can print money on demand. So that's why they keep, having deficit and like no other people's business. Singapore can't do that because we cannot print money, so we have to be very prudent and such, okay. All right, so the chart over there, the US debt has a limited impact on the S&P 500. So I'll just share with you this chart over here. Okay, so this is the downgrade, okay. I think previously I mentioned last week, I also mentioned to you, this is from another source over here. So this is the US downgrade. So what happened to the S&P, okay? So in 2011, when the the S&P downgrade from AAA to AA+, right? The market actually came down a bit, okay? So this is, I think, a bit small, but nevertheless, okay, it is okay. Just follow my cursor over there. And then in 2023, the Fitch once again downgraded from AAA, okay, to AA+, okay. It happened to have a correction because at the point in time, okay, the market was actually quite toppish already. So this this news that came out just give the market a reason to have a correction. So in my opinion, it is not because of the Fitch downgrade. So actually, it came down for quite a number of months. Of course, then recently, 2025, the Moody downgrade to AAA to AA1. So once again, did not really have an impact. So it's a limited impact that I mentioned. Okay, so this is okay. Now I'm coming to the so-called the tax bill. The tax bill over there. Okay, so on May 22nd, just recently last week only. Okay. So the House passed this, the reconciliation bill over a single vote. Okay, what the OBBB like and a lot of things. Okay, so it proposed extend the 2017 tax cut. Okay, and X bricks for tips. Overtime senior raises the cap to 40K, income under 500K. It is very similar to the Singapore budget. So they propose a lot of things. Okay, like give you CDS voucher CDC voucher. So-called utility rebate and this kind of thing. So something similar, okay, on this tax bill. So the revenue offset proposed, okay, to fund the cuts, right? The bill includes, okay, how to get back the money, okay, reduce renewable energy incentive, stricter aid eligibility, and Medicaid work requirement. Okay, so the deficit impact, okay, the Congress Budget Office that over the 10 years, okay, you add nearly 3 trillion to the deficit, okay. All right, so the cuts are backloaded while tax relief is front-loaded, okay. I think it's a bit cheap from this statement. Basically, okay, it is telling you that, okay, all right, it's going to add 3 trillion, 3T, okay, to the US debt over the 10 years, okay. Because it gives tax breaks early, okay, while savings from the spending cuts happen much later, okay. All right, so it gives tax break much earlier. All right, so short-term growth, okay, it is going to be some provide modest fiscal stimulus, boosting the near-term GDP, okay, through tariff, rising deficit could offset gains, okay. Once again, this bill, okay, is not final yet, okay. So the final version is going to be targeted for passage by the 4th of July. Okay, so this is the new tax bill that is going to add 3 trillion to the deficit. Once again, this is just information, knowledge, okay. It is good to know, okay, just to know what's being aware of the market, okay. So this is like, add more so-called billions and billions every single year to the deficit, okay. So the US is still going to have deficit, okay. All right, Ken. And of course, okay, the EU also surged to the multi-year high. All right, so the 10-year Treasury yield rose above 4.5. The 30-year crossed 5%. Okay, nearing the highest level since 2007. Okay, all right. So the long-term debt, it is under pressure because recently, just I mentioned, right, the auction, it is not really good. Rising borrowing costs are affecting the long-term treasuries more than the short-term one. Okay, steepening the yield curve as investor demand a risk premium. So in short now, okay, you just need to take a look at the yield curve. Okay, so basically it is what telling you that the 30-year yield, okay, the 30-year yield, okay, has been, skyrocketing, okay, recently, okay, has been going higher to touch to about 5% plus, above 5%. But of course, right now it is down to about near to 5%. At the peak was about 5.15%. Okay, 10-year yield, okay, it is also going higher as well. So basically, the yield, it is actually going higher. So that is sparking the concern, okay, for many traders, investors, or whether the US bonds, the bonds market, it is doing okay. But so far, seems okay for now. Okay, all right. So it is actually the speed. Okay, it is actually the speed of the so-called the yield, okay, or the bond price that will so-called affect the Fed to take action. So previously, you can see that after the Liberation Day, right, the speed, the velocity, okay, of the 10-year yield or 30-year, it actually spike up very, very fast. Okay, faster than this. Okay, although it is like almost similar on par, but this is still much faster. So the speed of it goes up. Okay, it will spark concern. But this one, okay, it is still generally okay lah. Okay, you can see if you take a line chart, can you see better? Not much difference, but you get what I'm trying to say, right? Okay, so this is like every day, going out a little bit higher, go higher, go higher, that kind of thing, okay, come down. But this one, okay, so this one, okay, it is actually, pump, one straight line up. So that is sparking the concern. That's why at that point in time, during the tariff liberation day, actually, Trump slowed down things, okay, say that, it's going to break the bond market, so they hold the tariff and such. So right now, the bonds market, it is okay for now, but of course, if continuously going higher, okay, they're not so good, like, in a way, okay. All right, so so that's the reason why, because they say that, okay, rising borrowing needs. So if rising borrowing needs, okay, will cause as investor demand a risk premium. Okay, so this is the one. Okay, so beyond credit downgrade, okay, yes, these are some of the reasons as well. Okay, because of the stronger growth expectation. Okay, because okay, people are expecting that, okay, the economy, it is still okay, stronger growth expectation. So people are putting less money, okay, into the bonds market and plow the money back into the stock market. So if there is less demand for the bonds market, okay, then the yield will go higher because lesser demand, so need to have higher yield to attract more people to put money in the market, correct or not? Okay. And once again, if there's a reduced recession risk, okay, all right, which means that people are not so scared, okay, then they will also put back the money, okay, into the stock market, okay, then they'll put less money into the bonds market as well, okay, also pushing yields and higher, okay. Does this make sense to you? So if you understand what I'm trying to say, okay, just type yes in the comments. Just type yes in the comments. Okay, so once again, it is not just a US thing. This is a global thing. Okay, the long-term yield have climbed not just in the US, also in Japan, Germany, the UK, and Australia. Okay, of course, there are some people that are concerned also that Japan, okay, the interest rate is rising too fast. Okay, so some people ask me whether it's going to be okay or not. To be really honest, okay, I don't know what will happen if the Japanese interest rate hike too fast. Okay, when it happens, something break, okay, we will know it lah. Okay, but as of now, I think everything is still seems to be under control. Okay, until we know it. Okay, so I'm not so good in a way that I can tell you what's going to happen, this and that. Like, if I know, okay, then I'll be one of the insiders really. So I can't really tell the future. Okay, so but as of now, okay, based on what I see, still okay, not of too much of a concern yet lah. Okay, all right. So yeah, so opinion, my personal view is that the rise in yield may be self-limiting. So as higher rate eventually attract buyers, slow growth, and prompt policy adjustment. So if the yield continue to go higher, I'm sure, okay, the Fed will also come in to stabilize things. Okay, of course, if the interest rate, the yield, okay, like spike up too fast, the velocity, the key thing is the velocity of the spike. If too fast, then I think the Fed will actually come in to help things out. Okay, so not to be so concerned yet for now. Okay, all right. So the US deficit are growing. Despite this, okay, the S&P has also returned 230% over the same period. So you realize that, okay, unwinding of the Japanese carry trade. I think this has happened, mentioned about, I think for a few months ago, okay, or last year. Every single year, there are always people talking about the carry trade also. But so far, nothing much has happened. I'm not saying that it's not going to happen. Okay, again, it could happen. Okay, there are some unwinding of the Japanese of the carry trade and such, okay, of the interest rate and such. But it is not really actionable in my opinion. Okay, it is not actionable in my So Henry said last year August. So in fact, before that, there are also people talking about this already. So my personal opinion is that things might happen, but don't need to be so afraid that you don't dare to take any action in the market. You see any action, okay, you have to take it lah. Okay, for me, maybe my standpoint is a bit different. Okay, because I'm doing swing trading. Okay, swing trade means I hold for maybe about 10 days to 30 days, 1 month at most. So this sort of shorter term trading doesn't affect me much. You can tell me the unwind, the yen trade, carry trade, and all this. But it doesn't really affect me much because I don't hold for a long term, like 6 months, 12 months in a like forex trade, that kind of thing. So it doesn't really affect me much. Okay, all right. So yeah, but it has been ongoing for a while. Okay, yeah. Always worry the same thing, then you make you feel very scared. You don't dare to take any action. So I mentioned, okay, the deficit is also one thing that, you know, since 2011, okay, people have been talking about, these trade deficit things are, US has been, you know, spending more than it could, the income that's coming in, you know, a lot of debt. 2011 say until now, okay, the US market has gone up so high already. I'm not saying it's going. I'm not saying it's going to come down eventually, but I say that, you know, imagine that 2011 you are scared until now. You don't dare to take any action. Then what's going to happen? You know, you just miss the whole bull market lah. Okay, then you always be a permanent bear. Okay, then always thinking that, okay, the stock market is going to crash. The stock market is going to crash. Every single reason you think that the stock market is going to crash. Okay, all right. Once again, I'm not saying the stock market is not going to crash. I'm saying that, you know, this kind of reasoning is making you to have inaction. You don't dare to invest or trade anything. Okay, all right. So yeah, so all these things are, I think, not so much important. So at the end of the day, okay, the treasury bonds, the treasury, okay, still remains a safe haven. Okay, all right, because there's no alternative. Okay, there's no alternative. So US dollar, it is still the reserve currency. US is still the #1 economy. US still can print money. So no viable alternative exists now. Okay, so the debt and the yield, okay, it is also doesn't really correlated lah. So at the end of the day, okay, all right, the long-term bond yield have this decline despite the debt increasing now. So, you know, this is the chart that I found. Okay, so this is the, okay, so you can see that the blue line, it is, let me try to zoom in. Okay, so the blue line, it is actually the debt as percentage of GDP. So 10-year yield, this is the golden line. So it has dropped, okay, despite that, you know, the debt has overall increased at a much faster pace. Of course, recently it came up. So this is all I'm trying to say. So at the end of the day, it is basically trying to tell you, okay, there's no alternative. Okay, even though you might be worried about the US debt and all this, okay, right, there's no alternative right now. Okay, US is still the #1. Okay, all right, and it has gone up since 2011. So let's don't talk about like how many years back. So in recent years, since I started trading in 2011, 15 years, okay, it has been going higher. Okay, any questions so far? Any questions so far? Okay, so before I continue, just a very quick show again. Okay, so the Philip Nova, they do have a promotion right now. So in case you are new, okay, Philip Nova used to be called Philip Futures, so you can trade multi-asset classes all in one platform. So right now they do have a promotion. Fund and trade, okay, between 19th of May to 30th of June, you fund $1,000, place 6 trade, you receive a $100 cash bonus into your account. Okay, you can test out the account, try the account, and also test out the MT5 platform over here as well. So all the asset classes, it is all here, like forex, shares, indices, crypto, commodities, you know, ETF, it is all there as well. Okay, all right, so this is, share the QR code over there, scan the QR code, and I will post this link in the comments as well. Okay, so this is open an account here, it is free. Okay, I'll post the link in the comments. Oh, by the way, okay, in case you don't know, trading CFD, it is free. Okay, all right, trading CFD, it is free. Okay, no minimum charges, especially ideal if your trading size is small. So it is still more cost efficient than those CFD provider with a fixed commission. Typically, CFD provider charges about $8 to $10 USD per trade. So you buy, it is $10. You sell, it is $10. So round trade is $20 already. So it is a lot of commission, okay, if your account size is small. Okay, so I'll post the link once again over here in the comments. So your views on gold here. Okay, later I will go through the gold. So remind me, Henry, remind me if I forget about that. So let's go through this. Okay, before I go on that, last week, right? What did I say about the Euro 6E futures, which is essentially the Euro USD, okay, 25th of May to 6th of 9th of June. For the past 10 years, 90% of the time, it went higher. So let's take a look at the Euro USD now. Actually, I have this thing over there, Euro USD. Okay, when I first mentioned, it was here Monday. Okay, if you go for a swing trade, okay, you will have profits over here. So this is actually going high. Again, this is once again based on the seasonal trend, seasonal data. Okay, so you know when you have the data, be it stocks, ETF, or some of the futures data that I have, okay, you know exactly what stocks, what ETF to zoom in. Okay, all right, so you know exactly what stocks to trade. So in case you wanted to know, okay, more about seasonal trends, okay, all right, you can head over to our social media page over there. Okay, I'll post the link in the comments. All right, you can actually scan the QR code over here, okay, and head over to the social media page, okay. At the page there, you can access to my on-demand webinar, Unlock the Secret Patterns Hidden in the Market. So this is a webinar where I share you how to use the seasonal data, okay, to help you uncover profitable trade, okay. And this is the so-called the closest things to having a crystal ball in the market, okay. So this is the Linktree social media page over there. I'll post a link in the comment. So essentially, this is what you'll see over there. So this is the page over there at the bottom. All right, you head over to the webinar. Okay, here, then you can just key in the details lah. So this is on-demand webinar. All right, so how many of you actually traded the Euro USD? How many of you actually traded the Euro USD? Okay, I know Wylam traded lah. Any other people traded this or not? Okay, if you have traded this, just type me in the comments. So I don't know how many of you traded. I know there are some people who trade, but you know, they always keep quiet, don't want to tell me one. Then I won't know lah. Okay, I know Walam already have been chatting with him lah. So I know lah. Okay. All right. So before I go into the chart, so let's head over to the chart right now. So this is the S&P 500. So of course, this is the futures today. So it is up 1%. Okay, because of the US tariff on the Europe thing now. Okay, all right. So in case you want to know, okay, let me just close a lot of tab here. So only other than Wylam, nobody else traded Euro USD. Okay, when there are almost more than, I don't know, 200, 400 people watches my live stream. So all of you don't trade forex, is it? Okay. Personally, I actually traded NZD USD. Okay. Essentially, the concept, it is the same now. Okay. So because, you know, the dollar is weakening during this period of time based on seasonal data, you know, when I first traded in, because the Europe, the Kiwi dollar first came in, the trigger, the signal for me, okay. So I do trade forex as well. So it actually went higher, okay. All right, so this is the dollar, not the dollar, the Kiwi dollar. So the concept is the same. So the dollar is weakening, okay, across the other currency pairs as well, okay. So yeah, so for this time round, okay, so this is the spot gamma. So where is the zero gamma level right now? Okay, the zero gamma level, it is at about, can see over there, over here, right? It is just right smack between 5,008 to 6,000, okay, in between about 5,850, thereabout, not exactly. So 5,850. Okay, so right now we are below the zero gamma level. Zero gamma level, okay, meaning that, you know, the options dealer, they are net, you know, negative gamma. Okay, if you don't understand this, never mind. I don't have time to explain, so don't explain also. Okay, it will take a lot of effort. Okay, anyway, so if price is below the zero gamma level, okay, there could be volatility ahead, okay. If price is above the zero gamma level, okay, then there will be a lot less volatility, okay, and price will be in a smoother uptrend. Of course, based on the futures pricing right now, okay, very likely that, you know, when the market open tomorrow, if it continues at it is like that, there's a good chance that the market will be above the zero gamma level tomorrow. Okay, all right. So in fact, you know, I have been trying to study the so-called the options flow. Okay, if I won't go through details about the options flow. So I actually analyze the options flow, okay, all the buying, selling options. So there's a lot of data, So I won't share with you where I get the data, okay? So there is a lot of data. So I analyze with the help of AI, okay? Because there's simply too much data already. So, you know, it is very hard for naked eyes for me to go through thousands and thousands of, you know, options flow data line by line, okay? Okay, so based on the options flow data, okay, there was actually some, you know, bearish buyers. There were also some bullish buyers, okay. So all in all, you know, it is still fighting in a way. So which means that, okay, my personal view, okay, I maybe there's a chance that the pullback might not be as steep as it could be, okay. So the pullback might not be that steep, okay. There's still underlying support at certain level below, okay, based on the options flow data over there. So I repeat, okay, the selling might not be as steep as, you know, it could be, or what I anticipated, okay. It could be just a very shallow pullback. So if you actually look at the central pivot range over there, if you add in the yearly CPR, okay, maybe I go through the futures first, okay, futures you can see over there, okay, futures are easier to see, okay, so you can see over there, price goes above the yearly CPR. The yearly CPR is the black dotted line over there, okay, the yearly CPR. You can see that, you know, price just hit, okay, the somewhere near the pivot point, okay, and then rebounded over there. So it is holding on as a support level over here on the S&P futures, okay, S&P futures, okay. The Nasdaq, okay, it is also right at the yearly CPR support level over here, okay. And the Russell 2000, okay, it is right smack at the cloud support over there. But one thing I don't like, okay, it is actually the pin bar over there. So you all, I don't like, okay, that it could be a trap, okay. The market can just go up like that and then come back down again, okay. Right, remember what I told you about the Euro USD last week, okay. All right, when I see a pin bar over there, I don't like it because it traps a lot of retail traders to go and short this shooting star pattern. Okay, come down a little bit and then price go up and reverse back higher again and trap you. Now you have become the trap trader if you go and short this Euro USD. Right? So this is the indices. So this is the S&P okay, cash index. Okay, this is the Nasdaq cash index. So there is a pullback over there. So as of now, the options flow, it is still okay, but it doesn't mean that it can't change. Okay, all right. But overall, okay, my bias is that I am still a little bit more cautious. Okay, so there are a few other things that I look at, for example, like the seasonal trend, okay, like the market graph, etc. So no change, okay, ever since last week, okay. So there's no change as well. So that, you know, I say that, you know, there you need to be a little bit more careful, okay, because, you know, typically, okay, for the index during the post election years, okay, which is this year, second half of May, towards the end of May until June. I am not going to tell you when is it. So the seasonal vantage insiders will know when is it, okay. I've been showing you the seasonal roadmap, okay, so you know when is it, okay. But until June, okay, it tends to go down lower, okay, or it tends to go down lower based on the post-election seasonal trend. So there's a weakness, okay, that's one thing. And if you actually look at the market graph, okay, so it did come down. When I first mentioned, okay, it was at the peak, so it did come down a little bit, okay. So you can take a look at the percentage of stocks above their 20, 50, 200 day, right? So last week, I mentioned that, you know, typically when the short-term breadth is at a high more than 85%, that kind of thing, can see over there, okay? Every time it does that, okay, it will have a correction over there, okay? All right, so, yeah, so at a point in time, last week, it was at a high, so it actually came down, have a shallow pullback already, okay, had a pullback already, okay? Same for the 50 EMA, percentage of stocks above the 50 EMA, not exactly at a high, okay, like more than 85% kind of thing, but still at a relatively high 80%. So it's starting to drop also. So the market has actually came down already. So now the $1,000,000 question, okay, it is that whether it will continue to go down or not. Okay, that's the $1,000,000 question. So, okay, as much as I want to tell you a clear answer, yes, it's going to go up. No, it's not going to go up, that kind of thing. Okay, I'm not a guru. Okay, so I don't know. Okay, the honest answer is I don't know. But personally, okay, I have a short position in the S&P 500. Okay, SPY. Okay, so I shorted somewhere SPY somewhere near the top over there lah. So okay, all right, somewhere near the top over there. I believe after the tariff thing as of now, okay, maybe break even tomorrow or maybe little bit profits only. Okay, all right. So I still have that, but at the same time, okay, I'm also still looking for so-called position, okay, to go long. So in a way, it is hedging. Okay. So I have no idea whether the market is going to go up or to go down. But at the same time, okay, I'm okay to take side with both sides, okay, one short, one long, to either way hedge it. So what if I'm wrong, okay? If the stocks that I went long, okay, the market actually come down, then my short in the S&P will help me to cushion that, okay, to help me to cushion that, the losses, okay? What if the market, okay, did not come down, but instead going higher, okay, then the stocks that I'm long in, okay, will help to cushion, okay, the S&P 500 short, okay. So in a way, it is like hedging that lah. So I'm okay, not to make so much money, or in fact try to minimize my loss. Because at this moment in time, so I seriously don't know, okay, what the market it is going to do. Even though, okay, my bias is that it will, I'll prefer it to actually, go down a bit lower, okay, before I look for opportunity to buy again. Okay, all right. Is it okay if I tell you this honest answer or not? Okay, I don't know. Is it okay or not? If it's okay, just type okay in the comments. I'm not a guru. Which guru to ask? Okay. All right. So they're always guru show you, oh, very clear intent one. But to be really honest, I really don't know. I can only trade what I see. Okay, and try to hedge my position only. Okay or not? Okay or not? Okay. So, but my bias is more towards the downside of things. Okay. Yeah, I'm going to show you also. So this is the S&P gamma exposure. Okay. So 575. Okay. So all these are the gamma exposure. Okay. This is the 600. So 600 is definitely a very strong key resistance level. So last price 579.11. This is S&P 500 SPY. Okay. So 575 will be a key gamma level, which will be acting as a strong support. So which means that a lot of options dealer, they have a lot of positioning over there. So when they have a lot of there, okay, the market, okay, will tend to act as a support level there. So for S&P 500, okay, 575 will be here. Okay, 575. Okay. Somewhere around there. Yeah, I already put already 575. So a little more downside to go lah. Okay. So it didn't really touch that. If it really touch that, then 575 will be a strong support level. But of course, this will always changes as well. Okay. So it is at this moment in time now. Okay. This is dynamic, not static. Okay. All right. So yeah. So I think Henry asked about gold, right? So gold. Okay, so this is the gold over there. So prior to that, okay, gold initially I was actually bearish on gold, okay, but then after that it started to go higher. So I was analyzing some options flow set, which I mentioned, I think in the group chat, right? So in the seasonal vantage group chat over there. So market update, I forget where is it already. Is it gold? Yeah, so in fact, you can see gold, I actually, went long on gold because 310 on GLD is the highest gamma level. So I a bit lucky, so I took profit there. So I actually went long on gold previously. So you can see over there, did I mention on gold? Okay, so based on the options flow, the gold and the gold miners flow, it is still moderately bullish lah. Okay, so yeah, can see over there a lot of gamma level over there. Okay, 310 was there. So based on my latest reading on gold, right, the gold sentiment, not sentiment, the options flow, okay, it is still relatively bullish, okay, but I think we are already somewhere near the resistance level already, okay. The upside may not have been that much, okay, because the easiest trade, the easy trade was actually when price is somewhere around here, when price rebounded, okay, at the CPR level, then that was the easy trade for a swing trade. So right now, price has already gone higher already. So for me, it is a bit unclear right now. I mean that the reward to risk ratio, it is not that good. It can continue to go higher to touch the swing high, but you know the easy trade is gone. It's gone in my opinion. So I won't be taking gold trade, but based on the flows, right, I think that there could be still more some upside to go for gold. Okay, please again don't quote me. This is not financial advice. Okay, I'm just sharing with you what I see in the market. Okay, and such and the flows and such. Okay. You always ask, is it a good time to buy some TLT? TLT, okay, TLT, to be honest, it is a bit difficult to trade. So previously I was long TLT, so I get stop out. So after it came down again, so you know I didn't really touch it. So not the easy way, not the easiest to trade right now. Okay, so I would prefer if price continue to go down lower. Okay, if you want to spot reversal, can see the card. If you want to spot reversal, okay, at least wait for the maybe you know next month that's coming up soon, the CPR to come down lower, then price break above the CPR, then it is so-called be more advisable to go long into TLT, okay, you know, more comfortable because right now it is still definitely in a downtrend. At least price is above the CPR, then I know that okay, the downtrend has less momentum now, okay. So yeah, so I won't be trading the TLT for now, okay. At least wait for price to go above the CPR before I continue wanting to trade the TLT, okay. Any other questions so far? Okay. So all in all right. So what I'm trying to say it is that, you know, the market, okay, based on market breadth and such, okay, we are still a little bit topish, okay, but okay, there are support somewhere around the region here, okay, like what I say, S&P, the futures or the cash index, okay, we are at the support. So, you know, be prepared that the market might have just a shallow pull and then continue to rally higher, okay, rally higher. But once again, when it rally higher, doesn't mean that you just continue to go higher, okay, it might just, you know, go higher, you know, trap a little bit higher and then come back down again. So that all these are possibility, okay. So you need to be a little bit careful. Oh, Skylar, how come you are here? Okay, Skylar, what's your thoughts on UNH? No change. Okay, so I think I mentioned that last week on UNH. So I think UNH, okay, so you know, based on the options flow, okay, also not that very accidentally bullish lah. So once again, I say that, you know, that it was a pin bar over here. So I don't like this pin bar hammer candlestick pattern. So, you know, no, I know that people after that starting to chase here. They're starting to come down. Now they feel scared. So what I was trying to say is that, okay, many times, okay, the recovery, it is not V-shaped. So a lot of times when we think, wow, sell off very cheap, what we actually wanted when we actually invest in that stock is we wanted a V-shaped recovery. Okay, we wanted a V-shaped recovery. That's what we have in mind. Okay, V-shaped recovery. Okay, but a lot of times it might not happen to have a V-shaped recovery. So like I mentioned last week already, okay, price could just go down like that, you know, ping pong, 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 ping pong for a while. You get the idea? Ping pong for a while, for many months or even like 1 or 2 years until you give up, okay, and then price continue to go higher. So unless you have the capacity, okay, the patience to hold, okay, then you buy for long term lah, okay. Because you know I know that there are already, you know, CEO so-called exited, you know, quit, then the CFO also quit and all this. So fundamental wise, I did not really go and check out on UNH lah. But you know, if you think that it's undervalued, intrinsic value is below the intrinsic value and such, you can go ahead and buy. But just mentally prepare that, you know, it might not do a V-shaped recovery. Like I said already, most of the time when we buy, we always wanted to buy. We always hope that it's going to be like a V-shaped recovery. The moment we buy, we want it to rebound. So it might not rebound. So it could be, you know, just ping pong for all the way. So like I mentioned, like BABA, which actually trapped a lot of people a number of years ago. Okay. All right. So thinking that, oh, it is at a low, it's at a low, it's at a low. Okay. You buy. Okay. Yes, fundamentally, it is a good stock. Intrinsic value is low, but you know, it trapped you for a number of years. Okay. Before it started to go higher. So unless you have the patience, then you do that. If you don't have the patience, okay, at least, okay, wait for price to break above the CPR, okay, or do CPR consecutively, then I would say that, you know, there's a good chance that UNH has reversed from a downtrend to an uptrend. Okay, so price action will tell you the first step, it has to break above the CPR one. Okay, eventually it has to break above the CPR one. So if you break, good. Second month and break, then there's a good chance that it has recovered and maybe you head into uptrend. Okay, all right. Ken, all right. BTC, okay, what's your view on BTC? BTC, I think I have always been bullish lah. Not say always lah, okay. In fact, I told my members in the Telegram group, okay, BTC, Ethereum, bullish, okay, bullish. Okay, simply because, you know, price has already broken above the CPR, okay, CPR like that. So when I first mentioned about Ethereum, okay, like I think it was somewhere around here, okay, somewhere around here, okay, it come down and then go higher. I think I can find it. I think I can find it. Can find it. Over here, okay. All right, this was shared on 1st of May, okay. All right, in case you are not aware, ETH is now above the monthly CPR. When I first mentioned, it is just somewhere around here only, okay, just before it went higher, okay, just before it went higher. So right now, it is bullish, like it is bullish, okay. So my personal view, okay, again, not recommendation. I think there could be some more upside to go, okay, but again, timing the short term wise is a little bit difficult, but maybe 1 or 2 months down the road, I think there could still be some upside, okay, simply because based on sentiment, not much people are talking about Bitcoin or Ethereum right now, even though it has gone up quite a bit, but do you realize that not much people are talking about Bitcoin, even though right now it is at all-time high, okay? Do you agree with me? Previously, when it is at here all-time high, wow, you know, everybody is shouting about Bitcoin, wow, 100K all-time high. Okay, then the media starting to talk about all-time high, Bitcoin is all-time high. Then there is a time where I need to be a little bit worried because everybody is shouting about Bitcoin. Okay, do you agree with me? If you agree with me, just type letter A in the comments. Okay, all right. So this is, but right now it is at all-time high, okay, or somewhere near the all-time high. Okay, it's all-time high. It is at all-time high, but nobody is shouting about Bitcoin, Ethereum right now. For now, very little. So that's why I think that there could be still some upside to go. Okay, how high you'll go, you'll know lah. When the time comes, you see your social media feed, your Twitter X account, everybody shouting about Bitcoin, Ethereum. Okay, all right. Then you know that a short-term peak might be there already. But for now, I think that there's still some more upside. But based on price action, okay, and based on options flow, okay, the flow also seems relatively bullish to me. Okay, it might still more bullish to me. Okay, all right. So you need to be prepared, okay, that it might consolidate range for some time now. Okay, so if you want to put your capital to better use, then you might want to skip that for now. Okay, all right. Okay, any other questions so far? Any other questions so far? Okay, how many of you want to know a trade idea? If you want to know the trade idea, okay, just type me in the comments. Don't type me, okay? Like my Facebook now, okay, the live now only got 14 likes there, okay? Can you give me some like and share or not? Like or not? 14 likes only on Facebook, okay? There are more than about 120 people, I think, combined right now, okay? If I don't hit 25, I'm not going to share the trade ideas today. Who want to hear the trade ideas today, okay? Right, just type me, okay? And also at least 25 likes. Liking is very simple, just like only what, okay? At least 25, then I'm going to share. If I don't hit 25, then I'm not going to share it. Last week was what I shared on the Euro USD, but nobody said they traded, leh. Maybe this time around you also don't trade also. Anyway, not advised to trade lah. Okay, basically just sharing with you what I did. Okay, and all these are basically seasonal trade. Okay, and by the way, okay, if you have been following my so-called my live stream, you know that I have seasonal vantage insiders. Okay, but somehow you just never subscribe to my SEI. I just wanted to know why lah. Okay, I just want to know why. Of course, there are always people coming in, but I know that there are people who are not subscribed yet, even though they know about this a long time. I just want to know what's your reason why. Okay, I just want to know what's the reason why, because I don't understand. Some people are willing to pay, like what, 30K, 40K for what? I'm a diamond club member, diamond platinum member into this guru membership level. Okay, they are willing to pay all this thing. Maybe I don't charge high enough, okay, or maybe I don't sound scammy or salesy enough. No, I don't hype enough. That's why maybe some of you don't think that you want to join. But of course, I'm very supportive of the 300 plus members inside. But the rest, I just don't know your opinion. Okay, yeah, this is really just something that I want to share. Okay, yeah, I don't know why. I mean, some people want to pay 30K. Okay, upsell you 30K membership platinum. Okay, you really need to buy. My SBI less than, like, I don't know, 599, 799, you are not willing to buy. Okay. Okay. You don't see you mean the YouTube ads, is it? Okay. Hey, one more like. Okay. Yeah. So one more like. So before I continue, right? Yeah. So if you never join my SBI, just wanted to ask you why lah. Okay. Is it because I need to charge 30K? Then you are willing to buy. Okay. Okay, 25 already. Okay, hit 25. Thank you so much. 25 already. So okay, let me just share with you one idea. Again, this is not a trading advice. This is not trading advice. So I'm just sharing with you based on historical data, one of the seasonal data as well. Okay, so one of the trade ideas that come to my attention, it is actually crude oil. Okay, so this is crude oil futures or CL. Okay, CL. So where is it? Okay, yeah. So on this, in fact, I share this to my seasonal vantage insiders as well. Okay, 2nd of June to 13th of June. So it's a short window period. Okay, for the past 11 years, 91% of the time, okay, it went higher during this period. Okay, so of course there are some other favorable period, so I won't share. So this is a relatively shorter one, which I also shared with my SBI member. So if you take a look at the crude oil futures, it is over here. Crude oil futures, it is over here. Crude oil futures, yeah. Okay. So you can see that right now, these crude oil futures, okay, yeah, just, cannot be more accurate than this. Just reading this CPR range. You can see the green dotted line or not? Just trading within this CPR range over there. So it is like ranging. It is ranging here. Okay. So of course there is this major shooting star over there. Okay, and then there is a hammer kind of thing. So I don't really like this this hammer candlestick pattern over there. But also there's also this huge pin bar over there, which entice many traders to go short lah. So if the market, the crude oil cannot go down further, so there's a potential chance that the price can go higher for crude oil. Once again, this is like, you know, the time period is relatively short, okay? So it is more for swing trade. So it's a holding on to maybe about 10 days, 20 days, that kind of thing. So relatively short period. So I'm looking at crude oil over here. So let's see whether crude oil can continue to head into higher, okay, at least to test this swing high in the coming days or week or so. So once again, you know, as a proxy, okay, you can use CFD, okay, you can use Philip Nova CFD, or can use ETF USO, okay, as a proxy to trade, because I don't think any of you guys here will actually trade the crude oil futures over there lah. Okay, so you have the CFD, okay, forwards, okay, or the USO ETF over here. Okay or not? Clear so far on this crude oil, okay? All right. So Lily Lim say, no, I don't teach options, okay? I don't teach options. I do trade options, but I don't teach options, okay? I don't think I am an expert in options lah, so I don't teach it, okay? I'm not good in everything. You know, there are some guru, okay, at one point they teach options. When certain things in favor, they teach stocks. Then after that, not in favor already, they teach other things. Crypto in favor again, they teach crypto. So they're expert in everything, okay? I'm not expert in everything, so I don't teach options. Okay. All right. So yeah, I expert in seasonal trend, seasonal data, and such. So this is something that I'm really good at. Okay. So if you want to know more about that, like I mentioned already, okay, you can actually go to my on-demand webinar over here. So this is the link over here. Okay, on-demand webinar over there, I'll post the link. Okay, so this is the webinar, Unlock the Secret Patterns Hidden in the Market. Okay. All right, so with that, thank you so much over here. So if you find value in today's live stream, okay, just type letter V in the comments. All right, or type value in the comments if I really appreciate your input over there. Thank you so much for staying with me, okay? And just one last call over there. If you haven't opened your Philip Nova account, okay, you can test it out using the MT5 platform over here, okay? And also, you know, there's a fun and trade promo, trade by 19th to 30th June. Find 1,000, you receive a $100 cash bonus, play 6 trade, no minimum size. You can go to the QR code over there, or you can actually, you know, head over to the link over here, okay, over here, bit.ly-nova-MWA. Okay. All right. Shah, okay. I think previously I mentioned to my members or what, okay. Yeah, that's the reason why. Because keep reading the news, right? Then you don't dare to do anything. Because don't read the news, Shah. Don't read the news. Always watch the price action, the market sentiment, the seasonal data, or whatever thing, okay? Whatever thing, market breadth, or what options flow, what, okay? Just don't read the news, okay? By the time you read this, most likely it is wrong one, okay? All right, Ken, okay? All right, so with that, thank you so much, and I will see you again next week. So once again, this is the okay, this is the call to action, okay, for the Philip Nova. Try it out, okay, open an account with them. With that, thank you so much. Good night and 晚安 and bye bye.